Bankers own and control the financial system and use it to their advantage. Every day we experience fluctuations in the markets, some mild and others violent. These changes are not a fluid, natural, and unknown effect. They are pre-planned, contrived, and predetermined set of events. Today, select stocks have been benefiting from the manipulation of the financial system, all at the expense of the individual. You came here for the truth, so let me unveil that for you. Today, we will discuss 5 banks getting sued for rigging the bond markets. That's right. Finally, somebody is stepping up to the plate and doing what needs to be done. First, we're going to look at these bullish sentiments. You will see the S&P 500 here in this chart, which to me signals a declining trend. However, according to this individual here out of CNBC, they get these bullish analysts on all of the time, and they are wrong again and again and again, but they keep bringing them back on. Why? Because that's the business. It's to try and get the stock market to hit new highs. And you need to get those little individuals in where unfortunately they are not going to like what's going to happen to them. Look at this. There's a stagnation. Now talk about it. Since 2013, the index has formed a topping pattern that has limited gains, according to this technician. But he says that the pattern has run its course and better times could soon be ahead. We think the S&P 500 could start to carve out a bottom. That's right. All technical analysis, nothing to do with the fundamentals, nothing to do with the fact that the economy is dead, is dying, is bleeding out. But who cares? That's not what it's about. It's about selling garbage. All right. Let's move on to this. There's more in that article if you're interested. Out of Barron's, the market is only 3% from an all-time high. To an old trader, this is encouraging. There is an underlying strength. So this individual here you're talking about, he's so experienced and he's so amazing and he's done so much over the course of his years in the industry. He was a trader for 15 years, blah, 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 and he is just so smart. And in fact, we must take his advice all the time. And he says, look, everything's going to be fine. Everything is great. In fact, there's no reason to panic. You should put all of your money into the financial system and it's going to be great. You're going to make a lot of money. And then it goes on and on. So here's the bullish sentiments, but nobody's getting into the fundamentals. Where are they? Now, yes, in a way, because of all of the high frequency trading and everything else, the fundamentals in a way get thrown out the window. But despite that, there are still some things that we need to look at, things that are just concrete. Corporations are sitting on 1.7 trillion with a T, trillion, in cash. And it actually has a nice little diagram here that you should check out for yourself if you can't see it in the image. But basically, they show the different amounts here of sprinkles. And they're just trying to give you that sort of picture in your mind. And the third one is 2011 U.S. median household income with the fake inflation adjusted. And that's 50,000 sprinkles. So that's interesting. And by the way, one sprinkle is $1. And then it just goes on and on. Apple's cash pile, in fact, here it's filling up 2 dump trucks, and then you go down and you'll see enough to cover the field at the freeway park to a depth of 2 feet. Anyway, what we're looking at here is the actual amount of cash that these companies are hanging on to. Now, if you're a company and you have a lot of cash, generally that's put into research and development, or it's given to the shareholders as an increase in dividend. Sometimes that happens as well. Or they expand the business. They use that cash to expand. Maybe they open up more factories. Maybe they have additional people they hire, whatever. But when you just sit on the cash, that means you're uneasy. And even if it was a really bad situation or a really good situation, you would know where to put that money. You would give it to the shareholders. Perhaps if you knew that money was going to be demolished tomorrow, you want to bring in some people who are looking for safety. You can give them a higher dividend. Perhaps you'll get some long-term investors. But when you're just sitting on the cash, that tells me that they're worried big time about something happening in the future, but they're really unsure. This is the big article of the day out of Reuters. Now, take a look at this. 5 major banks and 4 traders were sued on Wednesday in a private U.S. lawsuit claiming they conspired to rig prices worldwide in more than a $9 trillion market for bonds issued by the government-linked organizations and agencies. So who are the culprits? The same as always. Bank of America, Credit Agricole SA, Credit Suisse, Deutsche Bank, Nomura Holdings, and it goes on. Basically, they were accused of secretly agreeing to widen the bid-ask spreads. They quoted customers of a supranational, sub-sovereign, and agency bonds. So what's it saying here is that essentially they said, we will conspire together to decide what the prices should be, not allow the market to determine it, but we will sit down at a table, perhaps virtual table, sit down and decide, okay, no, it's going to be this or that. And they said, okay, that's it. And that's how they determine prices. And this goes beyond even the high frequency trading, but maybe they even program that in. These numbers really aren't real. The lawsuit filed in Manhattan federal court by the Boston Retirement System said the collusion dates to at least 2005 and was conducted through chat rooms, there you go, and instant messaging, and caused investors to overpay for bonds they bought or accept low prices for bonds they sold. It goes on. All I wanted to tell you is that yet again, we are receiving more confirmation about the collusion in between the government agencies, those who are supposedly protecting everybody out there, and that is not happening. You know that. The EPA said the air was safe to breathe. You all remember that quote, and we know what happened later on. This goes to show you that the financial system is unsafe, is not stable, it is fragile, and it is risky. Let's look at this here. The Bank of Spain figures show that the country's public debt is now worth more than the value of the economy. That's right. You're looking at the public debt stockpile standing at 1 trillion euros in the first quarter of the year. That represents 101% of the annual GDP. That's right. When you think about it, when it goes over the 100%, it's long gone. And that includes all of the fake calculations they use. That includes everything. Or I should say doesn't include everything, because they are able to push so much off the books. Now, I'm sure the European economies aren't as criminal as, for example, in the US, where you have so much of the off-balance sheet numbers, at least the size, but all countries seem to be doing the exact same thing. So look at Spain being one of the worst economies in the world, or in Europe at this time, I should say. And are they any different from what's happening in Greece, what's happening in Italy, or in Portugal, and others? No, of course not. But what is the solution to all of this? Every single time, it's more austerity, more taxes, and there is no indication of the economy getting any better. Then you have this. 2/3 of Americans would have difficulty coming up with money to cover a $1,000 emergency, according to this recent poll. Think about that for a second. $1,000, these people can't pay it in an emergency. Now, what is this? What's happening? Why don't they have that $1,000? Well, things have become too expensive. People have been spending needlessly as well. Let's not discount that, of course, you have people that are cash strapped. They are in the most debt they have ever been, ever. You have individuals who have no incentives to save as well because the interest rates are very low, and that has basically got them to get into other things. Look, if they put the money in the bank, they're not getting anything back. Perhaps even in certain situations, they're going negative interest rates. So why in the world would they put it in there when they can perhaps put it in the stock market, or they think, okay, I'll put it in mutual funds, or I'll just buy a house, or I'll buy a car or boat or something like this. They basically spend their money in one way, shape, or form because they think, look, I'm not even going to get any money back. Why am I saving it? Let's spend it now. Let's enjoy it. That's what's happening here, particularly noticeable in the US and Canada and the UK, and a little to a lesser degree in Australia, but I do see that as well. With high demand and a tight market, Bay Area housing prices continue to soar, setting record highs in April. So look at this right here. As you see that disparity where the prices are rising and rising, in particular here in the Bay Area, to record highs. When you have these other people who have to live in all kinds of tent cities, and all of these people who are just suffering not too far from the people who are doing so well. So there's that grand disparity which has formed. At the same time, however, you have people in the most amount of debt they have ever been. So watch for the disparity to continue. Look in the developing world as you see nation after nation, look at their middle class. You're going to have to look very hard because they don't have one, or very few fragments of one. That's a key indicator of a true healthy economy. If you found this video informative, please give me a thumbs up. I just wanted to say that I truly appreciate every single one of the donations I have received. Thank you very much for that. There's so much more information coming. I'm trying to hit this from all different angles. No matter what happens with the subscribers on here in terms of the numbers, I'm not even looking at that. All I want to do is be able to be of service to you out there. I do see your comments. I'm trying to get back to as many as I can. Have no fear. I'm reading them all, and I try to respond to them on here if I can't get to them on the actual comments themselves. So remember that. I am getting to your comments in one way, shape, or form. So last but not least, if you found this video informative, I know you will find my book, The Money GPS, even more informative. If you want to look through the book, you can actually do so. Go over to Amazon. They have a look inside feature, which will allow you to flip through the pages of the book and see if you like it. Take care.